Risk radar needs a little bit of an update after being out for a week. It was 2 Thursdays ago that I made some adjustments that I think worked out pretty well. One was the light on bonds, which had been red, shifting to yellow, reflecting some of the back and forth on the tariff impact for treasuries, which arguably give you a case to buy bonds as much as you do sell them. And just generally the level of certainty right now the market has arrived at in expecting a Fed outcome that looks pretty reasonable, the next cut being in the summer. The other thing that I shifted was the green light on crypto to yellow, reflecting the short-term bearish divergence on top of the long-term bearish divergence for Bitcoin, which obviously keeps me up at night. Not really, but looking at stocks now, there's something kind of similar happening. And so I want to put the yellow light on stocks after holding it green for some time. A few reasons, mostly technical though. It seems like, as I said at the top of the show, the overall fundamental backdrop here is pretty good for stocks, pretty good for risk assets. There's really nothing that's scary out there. There's really nothing to keep you up at night. But the potential for policy disappointment in terms of how far ramped up people's expectations have gotten, combined with just the charts, that's what I want to focus on is the technicals. There's a little bit of a bearish divergence also in the S&P 500. And the reason why I pay a lot of attention to bearish divergences, I find them to be very useful technical indicators in high momentum markets, and that's what we've been in. So I put a little bit more credence into that type of technical event than others for stocks, for crypto in particular at these moments. And that's what we've gotten while the S&P 500 put the high in. Keep in mind, it was a very small high. The futures didn't quite get there, but the index did put in a high, but on lower momentum. So technically there is that bearish divergence, and now we've had a few fits and starts for the S&P trying to break through to 61. Hasn't been able to do it. We're so close, you could literally break out the highs in a day, and then the light will go back green. But this is also reflecting a little bit of appetite shift, it seems, away from pure risk appetite into a little bit more of a cautious tone. We've got this massive breakout in gold happening, and that's something I pointed out a couple weeks ago too before I left, which was that the trade-off between gold and Bitcoin is something I pay attention to, given that Bitcoin and gold serve pretty much opposite purposes. Gold is where folks go if they want safety and security. Bitcoin is when they want to add risk and leverage onto their potential upside. And so the chart of gold's been looking pretty good while Bitcoin softened up a little bit. The other thing, too, that I'm watching is the bond curve, which is getting pinched. That's something I mentioned as well a couple weeks ago, to look for flattening in the curve. And that's part of the reason why I brought the red light off bonds, because there's that feedback loop of tariffs and other inflationary forces where if the Fed can't cut, then you start to eat away at the economic potential of the market and the economy, and that's where you get that flattening. Now, there's not really a usable correlation between the tens to the twos curve and stocks or crypto, but generally the message of this that we've gotten, this crunch in the tens to the twos, is just telling you generally that in the last several weeks here, the trade-off between growth and inflation and the Fed is looking a little bit more negative. And what I mean by that is basically maybe the Fed can still cut once, but it looks like the hopes that they're going to go on a whole cutting regime are not going to happen. And then on top of that, this is a conversation for maybe tomorrow ahead of inflation. But if the president's solution is then to try and force the Fed to cut, then you've got even messier issues. And here's the last part. The dollar I'm not changing, and I've held green on the dollar. This was the volume node I was looking at here around the 107.7 that should hold its support, and indeed it did, despite a brief trip downward. There's so much still generally backing up the dollar that looks pretty bullish. So we will update tomorrow and think about inflation. Have a good night.